1/3 of the workforce will not go back. Interest rates could go back to zero, but if capital is not available, you're not going anywhere. They're insolvent. They don't want the public to know that, of course, because they don't want to run on the banks.
Well, you alluded to the fact that workers aren't going back to work. And that was obviously a result of the COVID shutdown around the world. How did that whole time in our history, which has aged in a very interesting way, let's say, how did COVID factor into your complex calculations for the future there? How did you view that?
COVID actually didn't. I knew we were ready for a pandemic, because the last one, I think, was the Spanish flu and stuff like that. That goes back a long way. So I knew we were ready for it, but I didn't know the effects. I never anticipated that not going back to work. That I thought it would be yes, for time being you wouldn't go, but then you'd go back. But right now, the way it looks, 1/3 of the workforce will not go back. They'd rather.
Well, it reshapes people's behavior so much, and the fascinating thing was how people spent during it. It seemed like everybody went on a bit of a spending spree, changed their behavior. Now things are back to normal, and we don't really think about it as much, but maybe it accelerated some of the coming changes.
Well, what happened, of course, the governments gave out a lot of money. They printed a lot of money, and they gave out a lot of money in the general public, and we're still cruising on that.
It's kicking the can down the road, isn't it? I mean, when you can only run the American government for another 45 days before you have another kind of showdown.
Well, that's a different,
scary stuff, eh?
Can of worms. Yeah. But what I'm getting at, all the money that they spend during COVID, giving it to the public and redistributing all the money, printing and everything, we're still cruising on that. Ultimately, that'll come to an end, and that's when I anticipate the recession kicking in. And first of all, I don't know what the trigger mechanism will be. It could be commercial real estate, let's say. Right now, commercial real estate is affecting China in a real bad way. And again, like I alluded before, Australia's in a similar boat. U.S. definitely. And commercial real estate will take down a lot of U.S. regional banks. They're insolvent. They don't want the public to know that, of course, because they don't want to run on the banks. But they are basically insolvent. Because when I look at it, and I talk to my friends in, doesn't matter where, San Francisco, Atlanta, or New York, or wherever, those buildings, let's say a building is worth $1 million. Just numbers. The guy was able to get a $750,000 mortgage on it. Now with the vacancy rate in there and everything, that building's worth only $600,000. So the investor lost all his capital that he put in, and even the lender's losing. And that's the case with very large amount of office space, mostly Class B and C and the lower space. Class A is a little different in that it'll be affected, but nowhere near to the degree of Class B, C, and D, and so on space.
Is Bank of Montreal going to be okay?
Well, I don't think, to tell you the truth, they're all going to take a haircut, but our banks are a little different. Well, no question. They're all invested in commercial real estate. And that's where, when I used to take my trips to Toronto, and for past, 12 years now, 13 years, I've been talking and meeting with them and telling them the difference, showing them the difference between commercial real estate and agriculture as a whole. Doesn't matter, value added, included, and everything, from from producer level right up to the value-added finished good level, where it's a lot different. And they are, like right now, a lot of banks are looking to what is the safest haven. Agriculture is it. The only thing is that agriculture is nowhere near as sophisticated or as advanced from an investor's point of view. There's no vehicles of investment, like there's no REITs. Like commercial real estate is REITs. It has all kinds of different investment vehicles where agriculture doesn't. That's the problem with it at this stage.
But doesn't that speak to the fundamental argument of the fellow on the internet who's, I think, more or less a detractor of having outside investors like yourself drive up farmland so
you
their
have
son...
to. Otherwise, no capital, there's nobody is going to get. See, what I'm afraid of, what nobody's really addressing at this stage, let's take the U.S. as an example. The regional banks and so on, they're going to have problems. Now they have to recapitalize. They have to, because to meet the banking regulations, it's usually a 10-to-1 ratio. $1 that comes in as a deposit, they can lend 10 out.
Yep.
So now when they get those bankruptcies, failures, and so on, that'll deteriorate their capital base. They'll have to recapitalize. The only way they can recapitalize is either through deposits, new deposits, or some other form, lend less and so on.
Mm-hmm.
So now they're going to stop lending. That's coming down the road next. So everybody thinks, well, their interest rates are going to go down and this and that. And then they figure, well, things will be back to normal. No, they won't be. Interest rates could go back to zero. But if capital is not available, you're not going anywhere.